Hey, this is Raghu here. How are you guys doing? Hope you are having a great weekend. Now, I wanted to bring you one more magic indicator. Now, this is a very versatile indicator. Most of the folks know about it, but actually do not know how to use it because it is too much for them. Either the folks use too many indicators or they don't use any indicator at all. But if you're using an indicator, you need to master one. It's something like, so if you keep digging in one place, maybe one fine day you will be successful enough to dig a well. But if you're digging all over the place in search of water, you will just find only holes, maybe multiple hundreds of holes everywhere without water. Hope you can relate to this, what do you call, phrase which I used. So similarly in market, in trading especially, whatever methods you might be using, I'm not asking you to use my method. I'm trying to teach you different methods. Whatever method you use, you keep consistently using it, it will teach you a way of making money. So you have to be true to your strategy, true to yourself, accept the a reality that every trade is a risk, and understand that stop loss is a must. Then you'll be able to do it. Now let's quickly go ahead and identify what is this RSI. You know, RSI is a relative strength index. It's a momentum indicator. Although the momentum, the lines, these black lines, always follow the market. Market goes first and then these lines follow the market, and you have to use this RSI indicator based on the closing basis. So if you're using 5 minutes time frame, the RSI reading should be done only after the 5 minutes is closed. If it is 15 minutes, after 15 minutes is closed. If you're using it for daily purpose, usually at the fag end of the day, maybe in last 15 minutes, you can identify that particular day's RSI movement. Never jump the gun before the time frame of your trading is closed while reading RSI. Now, you know, RSI is a very versatile indicator, and I haven't modified anything. The standard readings are 70 and 30, and I have the 50%, you know, above 50% it is a buyer's zone, below 50% is a seller's zone. Exactly. And you will have a high momentum, or people call it as an overbought zone above 70 and oversold zone below 30. And I'm not going to get into nitty gritty of RSI. Now, what else you can use the RSI? Now, RSI can tell us whether the price is likely to go up or down. You know about it, right? It shows the momentum, the strength of the market. It can also warn us through the divergence when a trend is beginning to change. Now, I am more interested in this divergence. Now, this video is all about divergence. I'm using the recent charts. I can go on and on, but one of the problem I'm facing is I'm not getting enough viewership when I go in depth. So I'm going to cut short, keep it very simple. If you really like, enjoy, please do subscribe, comment, and appreciate me. I'm going to bring more and more quality videos. Now, this is a Nifty 50 option index from India. So this is applicable everywhere. Everyone knows about RSI, but what I'm going to show you is it's mixed with pivots. The edge you're going to have will be nothing like any other strategy. Now this is last Friday, price is below S1. Whenever price is below S1, what you need to understand, you know, smart money is going to come and price is going to go in one direction, is below S1 and below previous day low. On the previous day, market hits R1. You know, R1 is a resistance. So R1 near, you have almost two lines, but when you see the RSI, it's slightly above 50, not above 70 to indicate a bullish strength, just above 50. So you know market is in sideway, and you have a, what do you call, a kind of two lower peaks. It's not exactly divergence, but a lower peaks indicating the second move at the fag end of the day lacked strength. Now what happens next day? The next opening candle, 15 minutes candle, although it's taking support at S2, brings it below 60. Now this is where, see, the next candle is a pullback, it's an inside bar, but you know you have a resistance at previous day low. So When the RSI is around 70, sorry, this is 30, I beg your pardon, 30. What does it indicate? Now this is indicating there is a strong selling pressure. Although this is an inside bar, because of this overhead resistance of previous day low, you can definitely take a trade here because you know for sure the momentum is going to continue further down. And that's exactly what happened. Now here in this 15 minutes, we have an engulfing kind of candle where price gives a pullback to S3 pivot, but watch these pullback peaks. These are the double top, but these pullback peaks are not even closer to 50, where you can make a decision. Okay, the momentum of buying is so strong that prices are hovering around 50, and if it goes above 50, then it can go into a buying zone. No, it is hovering around what? Around 38, around 8 points. So you still know that, okay, the momentum of buying is not strong. So with the price action, this is the engulfing candle wick to body near S3. The second one is a reversal wick candle. You know market will go down. What will be a stop loss if you're using RSI? Something above 50 and something above S2. So this is how you had to trade. So a day before we had a kind of sign that the thing is weakening, and with the opening candle, we know RSI brought the momentum to 70s, sorry, 30s. So you know there was a trade. Now quickly. So here, see, this is the exact negative divergence. Previous day price above previous day high. Price is hovering, albeit in a range bound day. We have one peak, two peak, price trying to go up, but you know this peak is a doji bar. But when you see RSI, the second peak is low. All the price is trying to go up. The RSI is showing that this is lacking strength before this breakout happened. Now, if you follow this peak and this peak, the way you need to draw the trend line is peak to peak. Where did the breakout happen? Here. See here, RSI gives first indication that market is going down, and here this has broken down, you know market will go down. And when it goes below 50, what is that? It's a seller's zone. You know market is getting into seller's zone. That's exactly happening with the CPR. Now the astonishing thing is sometimes, majority of the time, not sometimes, majority of the times above CPR RSI will be 50, below CPR like this RSI will be below 50. So you can relate to the ongoing trend with RSI. Now let's quickly move this. Okay, this we had a very sharp fall. All right, on this particular day we had a very sharp fall. This fall, next day market goes up and forms a reversal wick. This is a buying pressure, you know, by price action. Also, price has gone down. Look at the RSI, positive divergence. Now you know this is a buying candle and positive divergence is about 30. And what can you do? You know it's a buying zone. Where can you confidently buy? The moment it starts going above 50%, you know market is going to go up. So usually with this negative divergence also, people will buy. Okay, this peak, this peak. How you are going to draw the trend line? For us, this peak and this peak is this one. Where exactly the breakout has happened? I'm marking you guys. You can practice this. It's need a little practice. You got it. Now, even if market comes down with reversal wick, you know with RSI hovering around 50, it has entered into buying zone. Now, let's go quickly and see this one. Okay, market below CPR, see RSI is below 50. Market fall goes down, we have a negative divergence. Now we have a reversal wick near S3. What is S3? S3 is a support. And this reversal wick is confirming that we have a negative divergence. You can buy here, keeping S3 as stop loss. Market goes up. This is where in a downtrend, you can spot the reversal beforehand. RSL will tell, even if you're afraid of this reversal wick, RSI will tell, okay, yes, you have a positive divergence that market might go up. Now, so see what happens here. Market pulled up, but see where it is, these two peaks. This is hovering around 50. It's not closing consistently above 50. What happened next day? So below 50 is seller zone, right? The next day you had a big red candle breaking it below 50. So you had an opportunity to take a trade here, no matter even if this pullback, you could have taken a trade. It is below 50. It's a seller zone. It went down. So here, the important thing you need to identify here is below S1 is a breakout, above R1 is a breakout, and RSI will give you the confidence about that breakout because the opening has happened below 50. Even yesterday's pullback did not take it to 70. It was closed around 50, which is a seller zone. You understood? So one last one, and then I'll close this. So this is below S1 again. Okay, below S1, previous day market closes above 50, but with this gap candle, you know, RSI is below 50. Market comes down and it goes sideways. It comes here, forms a kind of pin bar, and see, you have a day before a negative positive divergence on the RSI. And next day you have a narrow CPR. And where does the price opens? Price opens above R1. And where is the price? Above 50. Now above R1 comes down. Yes, it breaks below R1, comes down. And has it gone below 50? No. You can still keep your faith. So there is some buying pressure. The strength is not weakening. Now with this reversal wick, you could have taken a trade because it is above 50 and gone upside. Hope this helped. Oh, I have one more, sorry. I'll show this one as well. So this is very important, how to read the market. On this day, what happens? It faces resistance near R1, forms a double top, comes down, prices goes down, doji and the morning star, still prices goes down, but RSI is giving you a divergence here, positive divergence. Watch what happens next day. You have a very big red candle falling down up to S3. It's a very narrow pivots on this particular day, but this is a very big candle. But look where that big candle is. It's around 45, just hovering around 50. And it did not go. Whenever you have these kind of parabolic moves, you need to be aware. So what happens next? You have a piercing pattern, then two sideways, and with this candle, market is going above 50%. So you know the trend of downside is gone by just watching RSI. The trend will weaken if it is below 50. And with this pin bar, you know it's a buying zone and market went up. Although it did not go into oversold area, but definitely it gave you an indication of market moving higher high. So a day before, positive divergence was the key to identify this day's move. Similarly, a day before, positive divergence was the key to identify this move. And this one as well. Oh, this one is going down higher high. On that particular day with price action near pivot, it was a pullback. And this pullback did not cross above 50. This is facing near 50 and next day price opening CPR near the previous sell zone and RSI again opening near 50 and going down was your answer that market will go down. All right. Same thing here, the breakout where it has a pullback. Now what can happen on Monday? So Saturday, global markets have fallen. Friday, our market fell. So we have a positive kind of divergence. And if you see this low and this low is at the same level. So is it giving some kind of positive divergence? Definitely it's giving positive divergence. So on Monday, even if the market falls, you need to identify whether that fall or gap down can take the RSI momentum further below this level for it to indicate that there is a strong selling pressure. If not, I think market will pull back similar to the previous charts. Hope this helped. Thank you. Please do comment, encourage me, and subscribe, Bro Billionaire YouTube. Have a great weekend. Thank you all.